So as a real estate investor, when we talk about capital available between transaction, right, we're talking about a lump sum. Does this life insurance allow you to put a big lump sum in that policy, or are there restrictions on that policy?
Like, is there a cap on how much you could put in per year, or say something like
Sure,
that?
sure. So there are some restrictions, and at the same time, you sometimes can put in a large lump sum. The restrictions around life insurance are pretty much delineated by the IRS, at least if you want to get the tax benefits out of it, which is the reason most people do this. And so I wish I had a picture to share with you guys, but I know you have listeners here, so I'll do my best to explain it. Because it is truly a life insurance policy at its base, the IRS requires that there is a minimum death benefit for any given amount of dollars you're going to put in. So if, let's say, a 40-year-old female real estate investor is going to allocate $5,000 a month into this account, well, then the IRS is going to say, okay, well, for your given age and health rating, that's fine. You can put $5,000 into a life insurance policy, but you're going to need to buy at least this much death benefit to maintain a corridor between the cash value you accumulate and the death benefit that you have, so that it's legitimately justified as a life insurance policy. So that's where the limitations can come in. As far as how much you can put in, the answer is no, you're not really limited. Unlike a Roth, where you would only be able to put in $6,000 a year, I have clients that have done, in excess of $100,000 a year. On the other hand, on the smaller side of the scale, we have clients that are doing $2,400 a year. That's $200 a month. So there's a wide range of how much could you fund this with. The other thing I would say about the limitations, going back to the question about, can I put a lump sum into one of these? You can, but the IRS, again, is going to require that you phase money in over a period of time, and the shortest you're going to be able to make that period of time is going to be somewhere between 7 to 10 years. So the shortest time frames of building these for people, you're usually looking at a 7 to 10 year period minimum that you're phasing money into this. So if we would dump in, let's say, a lump sum of $50,000 in the first year, we're going to need to have some more money to be able to put into that over the next 7 to 10 years. So we always look on a case-by-case basis with whoever we're talking to about strategy. We always look at, what does it make sense to allocate to this asset today, and then how do we want to spread that in over the next 7 to 10 years or beyond. For example, me personally, I have one I'm funding through age 65. And the reason I'm doing that is I anticipate continuing to have income through age 65, if not longer. So I want to have a tax-free option in addition to my Roth.